Hey folks, Dan Frio here with your real estate news for November 24th, 2025. So there's some important news, especially if you're a homeowner or looking to buy a house in 2026. So that's what we're going to talk about in today's video. The Fed president of New York, he came in and basically shook up the market. What did he say? How did the markets react? How should we figure out where mortgage rates are going to go from here? Well, that's what we're going to talk about in today's video, folks. So my name is Dan Frio. I'm actually a federally licensed mortgage loan officer in all 50 states, as well as Puerto Rico. I would love to help you out there if you're looking to buy, refinance, if you're a realtor or broker. Got some information for you guys as well today. So without further ado, let's get over to what's going on with these and what will be changing those this week. So the first thing we want to talk about is right through here. We had New York Fed president coming out on Friday and saying there might be further adjustments needed this year. Well, there's only one meeting left this year, so he must have meant that they're going to be possibly a rate cut at the December meeting. So that's basically what took the markets. I think the stock market was up 500 or 600 points. Mortgage rates came down a little bit. But let's really dive into the data that the Federal Reserve monitors to see why he said this and why some Fed officials might be leaning on the side of rate cuts. And again, this is what you really have to focus in on. If you're watching this video because you're a homeowner trying to figure out, can I get a lower rate? Or maybe you're a home buyer saying, okay, where are rates going to go from here because that payment is really detrimental if I could buy or not. So in 16 days, the Fed's going to meet. And the probabilities of a rate cut just skyrocketed on Friday. It went from about 25% to over 75%. So what happened? Well, first off, let's get over to the data the Federal Reserve monitors so I can give you my take on this. And then we're going to come back to see what the probabilities of a rate cut are now after that Fed official spoke on Friday. So let's dive into this data. Here's what we want to look at. So if you're a realtor out there or a loan officer, this is the data you need to relay over to your consumers. The Federal Reserve controls those things over there, the federal funds rate. They don't control mortgage rates. They don't control car loans. They really don't control anything other than the federal funds rate, which is basically interbank lending. I'll get to that at some other point. But they focus in on these things right here to control that rate over there. They focus in on inflation, the PCE, and they also focus in on the unemployment rate. Well, obviously the GDP too, because if this thing is suffering, then everything else is going to suffer. So when we look at this, here's what their dilemma is. They're like, okay, the PCE, the inflation numbers, we thought this thing could get out of control. Okay, remember Liberation Day when that happened? The inflation rate, the PCE was about 2.3 to 2.4. Okay, right? Let's see, 2.3. Okay, where is it now? 2.7. Yes, it's going up. I predicted, I'm like, okay, that can go up about 30 or 40 basis points. That's what I was reflecting on, and we're right there. Okay, we're right there. Okay, so now we have oil, which I talk about on a daily basis. It's really coming down. It's below $60 a barrel. It's helping the inflation numbers quite a bit, more than you probably think. Then we go over to the unemployment rate. That's another area they're like, okay, this is going to be dismal. Well, we're under 5%. We're actually under 4.5%. Anything under 5% is full employment. So this is another area where they're like, okay, this is going to get really bad. And again, it's up 20 basis points. So neither of these really skyrocketed. So then the Federal Reserve is coming in and saying, okay, what should we do at the next meeting? Well, now it's looking like they might be cutting, but there's a lot of data between now and in 16 days. So here's what they're going to look at. Here's the data we got this week. Okay, so remember, we have PCE, which is inflation. They watch the GDP, and they also watch the unemployment rate. Okay, so what do we have on the calendar this week? Well, we have retail sales. That'll give us kind of how the consumer's doing. The PPI, well, this is going to give us some inflation numbers on the producer side of the equation. So let me explain to you guys what the PPI is. So let's look at it this way. PPI is producer inflation, but where would tariffs hit first? Okay, so if we jacked up tariffs at the border, and so all these companies had to pay tariffs to increase the cost of our goods, it's going to show up in that number right through there. So that's what we're going to pay huge attention to. Last reading, I'm not even going to pay attention to it, but we're going to show a reading at this time is that it's expected at 0.3. We'll focus in on that. I don't know what this is going to come in at, but this is a key focal point for this week. The next piece is we're going to go down through here, durable goods orders. That's also going to show us the breadth of the consumer. Then GDP. Okay, that's going to give us the growth of our economy, and then we're going to get initial jobless claims. So just think of the three data points we just got. We had inflation, we had GDP, and initial jobless claims. All this stuff is coming in this week before the holiday. That is all the stuff that fills in the blanks right through here. So this data is going to be hugely important. But let's get over to see what the markets are reacting to so far today. So we had that brief rally Friday, and I'll show you that here in a second. And then the market's rallying again today. So here's what we follow on my channel. If you're new to the channel, we follow the mortgage bond, which is right here. This is the biggest component of your mortgage rate, folks. So if you really want to figure out what the mortgage rates are going, subscribe to my channel over there because I go over each day where the mortgage bond is going. But if you don't have access to my channel, you can follow the 10-year Treasury. Okay, so here's how this works. The mortgage bond, if the price of the bond is going up, which you're seeing right through here, and this is a nice little rally in the morning, that means if prices are going up, that means yields are going down. Well, if this is a mortgage bond and the yield of a mortgage bond is going down, what's going to happen? Well, these are going to go down. So we might see rates go down even a little further today, but it's still early in the day. So that's the data points that we're getting so far today on the bond market. Let's go over and see how the equities are doing. They're doing pretty darn good as well. So across the board, this is kind of what I call a Cinderella story. When we have all the equity indices right through here, they're up. And if you're watching this video and you own any investments, most likely you purchase them in a long position, meaning as the price goes up, you make money. You can buy stocks hoping they go down in price and you make money, and it's called shorting a stock. So we can teach those on Stock Talk Tuesdays. But we have all the indices across the board up. We have oil up, but I'm not really concerned about that. I love this under $60 a barrel. And then we have the 10-year Treasury dropping down to 4.04. This was at 4.11 last week at one point. So this is down dramatically. So this means also mortgage rates are coming down. So that's all you need to really realize across the board there. Let's go to crypto. It's getting hammered again. My goodness, how low can that thing go? But maybe we'll talk about that tomorrow on Stock Talk Tuesday. So this is what you really have to focus in on. So now let's get back to, should you lock, float, or just keep watching? So if you're a homeowner right now trying to monitor this stuff and you're like, okay, what should I do, Dan? I mean, mortgage rates are down. I'm at 7%. Does it make sense? Well, go to our website and do me a favor. Do this. I created a RateWatch tool right up through there. Plug in your mortgage information. I don't sell the data. What we're going to do is we're going to monitor it. What I need you to do is put in the interest rate you'd be interested in refinancing. So let's say, for example, grab your mortgage statement and it says 7.375. Well, put in a 1% lower. So put in your rate at 6.375. So when it hits there, we'll give you an email, we'll call you, we'll text you, we'll go over what your new payment would be, what your cost would be, what your break-even point would be, and if it makes sense, we'll get the paperwork started and lock you in. If it doesn't, we'll continue to monitor rates for you. But what if you're looking to buy or build? That's a kind of a dilemma out there. So here's what my expectations are. Based on all this data that we're getting, I don't see in everything that I'm monitoring a huge drop-off in jobs. Is it cooling? Yeah, it's cooling. But most people just don't know what's going on. I had a lot of family members over yesterday. We have accountants and people in this position, that, and they're saying the consumer right now is just nervous. We just don't know. Every little pin drop, every little tweet can change everything. So as we get more stability, as we get more government shutdown out of the way, we take care of healthcare, we take care of all these issues, we get into a new year, a new Fed memberships, a lot of things are going to start to stabilize. So if you're looking to buy next year, I think you're going to be in a good position. So here's what's happening. We have one Fed member. He's going to early retire. I think it's January or February. And then Federal Chairman Powell, his term is up in May. So by the end of May, we're going to have a whole new dynamic on the Federal Reserve. So they're most likely going to continue to cut rates. So that's why you continue to monitor these things. But as you learned over the past, remember last September and the September before, the Federal Reserve cut rates and rates took a rally. Last time Fed cut rates, September of 2023, they cut rates. Rates went from 6.25 to 7.25 in 4 business days. So you're trying to protect yourself. Now, that's why we created the RateWatch tool. But if you're a home buyer in the spring or looking to build, I think you're in a good position as well. I don't think we're going to see mortgage rates spike. There's really nothing to cause that. But if you're trying to get qualified, reach out to us. Here's how I would like to walk you through this. Get pre-approved. Don't get pre-qualified. Okay, and get qualified or pre-approved at a rate maybe 0.5% higher than where it is today. And the reason being is protect yourself off like those that did in 2020 really didn't. And they didn't have any reason for it. Here's what happened in 2020. Had a lot of people getting qualified to build these big homes. Rates were 3-4%. Then within 6-8 months, rates were 7-8%. They couldn't afford those homes anymore. Make sure you're not in that position. I don't think we're going to have a huge rally like that, but just be careful. So when you get pre-qualified, make sure you get qualified at not today's rates, but maybe it's 6.75 or 7%. Yeah, 7%. And wouldn't you rather have a house payment that's $200-300 less than your max payment you wanted versus maxing out, and then you get a tax bill that's a little bit inflated, and then your insurance goes up, and within 2-3 years, it's like, how am I going to make these payments? Well, that's you, and you're already a homeowner. That's why you need to take advantage of our RateWatch tool as well. So that's what my expectations are. I don't think we're going to have any huge jump in interest rates. There's really no concern for that because I think we're past the tariff news. Yeah, there's going to be more inflationary news coming in. There might be a little more job weakness just for the instabilities of the government shutdown and everything else. But I think there's no reason the markets should really skyrocket from here. So my advice is, if you're closing within 30 days, lock in, don't look back. If you're closing longer than 30 days, just hang off and wait for a 30-day lock because that's your cheapest way to do all this. You confused? Well, let's go to my website. If you're a homeowner or looking to refinance, I'd love to take all the confusion out of this for you. My name is Dan Frio. I'm actually licensed in all 50 states as well as Puerto Rico, and I've been doing this for over 35 years. I'd love to help you. If you're a homeowner right now, check out the RateWatch tool like I just explained. If you're already in the middle of a rate quote and you got 1, 2, I don't want 3, 4, or 5, because if you're out there searching that many places, good luck to you. But if you just need some help with this and you got a rate quote, upload your loan estimate into that tool right over there. What we're going to do is we're going to send you a detailed video back to explain to you guys what our fees are, what our rates are, and if we can beat your quote on the fees and rates, I'm going to win you as a customer. So check out our RateWatch, the rate update website. We have a lot of things here, especially our blog section. I come in each week and add some different things in there to hopefully educate you guys on things like what happened on Friday. I do a recap. Rates moving, calculators, the 50-year mortgage, and more. So find out more about that. Subscribe today if you're not already a subscriber, and that hopefully will do it to you if you're a homeowner, home buyer, realtor, stock broker, mortgage broker, anybody out there. Hopefully on today you can understand a little bit more about the next one off those and the whys behind it. So thanks for watching, folks. If you have any comments, please leave them down below. If you haven't subscribed yet, please do so. We're this close to 40,000 subscribers. Can you get me there? Hope you can. Thanks for watching. I'll be here at the closing bell today. Might be a little sore. I got a cracked tooth I got to get filled, but I'll be back here tomorrow, Tuesday as well. And we will have a live Tuesday event. Yes, tomorrow we will be back with Stock Talk Tuesday to explain to you guys what the heck's going on with the stock market. So that's it for today, folks. God bless you. I'll be back here at the closing bell to let you know how this mess ends for the day. But if you need any help, please reach out to us. God bless. Have a fantastic day. See you then. Bye-bye.